Investors are pumping the brakes on Tesla after the company announced their Q2 numbers. On today's video, we will be going through all of the Q2 numbers, the revenue, the profit, all the different things as it partakes to Tesla. Get you all caught up with all the numbers, the deliveries, the financials, the balance sheet. We'll also be looking at the technical chart because in the after hours, after shares of Tesla during the regular trade, we're down over 2%. I'm seeing in the after hours, shares of Tesla now down over 7.6%. This follows the company's Q2 conference call, which I made a summary here on Twitter. If you're not following me on Twitter, you need to find that link down below. I guess it's called X these days. And if you're a fan of Tesla and you're a fan of Elon Musk, you should be a fan of the investor channel on X as well. Follow me down below. We will be recapping the Q2 earnings call. I've got a huge thread here of everything they talked about, from new vehicles, the cyber taxi, to the Optimus robot, to the energy and storage business. We'll talk about it all. What is going on, investors? Hopefully you guys are doing well out there. I tell you what, Tesla fanboys are going to be a little upset. But look, this is not going to be a Tesla fanboy video. Now, full disclosure, I own shares of Tesla. I have 2 Teslas in the driveway, but we are not going to fanboy about this company. We are going to give you the facts from an investor standpoint. Look, over the past month, Tesla shares have been skyrocketing, up over 31%. Even factoring in the decline, shares have actually performed relatively well in the short term, but year to date, shares have gone nowhere. Over the past year, shares have gone basically nowhere. Although if you stretch this out to a 5-year view, you still got a massive run in Tesla. The question for Tesla going forward, we'll talk about it when we get to the conference call, is can the next leg of growth materialize in the short term for Tesla? Or are we still several years away? Revenue in the Q2 came in at $25.5 billion. That was, I say, just 2.3% growth, because when you're looking at Tesla, you got 100 times forward multiple on those earnings. And I tell you what, just 2% growth in the shorter term, not going to cut it. And that's one of the reasons why shares are being punished in the after hours. When we start to look forward to the subsequent quarters, I think we have some question marks. If in Q3, you're going to be able to deliver $25.5 billion worth of revenue. I know we just did this in this quarter, but again, things continue to get more challenging as we move into Q4, $27 billion, really starting to flatten out as we move into 2025. Can we reaccelerate the growth rate? Some analysts say they can, but I tell you what, Tesla results today brings all of that into question. Now, when the company started their conference call, I believe it was right around maybe 2:30 Pacific time, shares of Tesla were down about 4%. They hyped up their energy and storage business, which we've talked a lot about here on the channel. We'll come through and we'll show you the revenues and the cost and kind of the profit that energy and storage business has been producing. And it should be pumped up because they had all-time high revenues and all-time high profits on that business unit. Quickly, Elon Musk's comments got onto a, quote, more affordable electric car model. They say coming early next year. That timetable continues to shift around. And if you look particularly here in the United States, affordable small cars don't really sell all that well. And we'll talk about that more as we continue to move through this. SUVs, big trucks, sell here in the United States, and those are big profit centers. These small, compact, cheap cars, there's not really a lot of profits there. Now, unsupervised full self-driving, Elon and the company is still saying is a massive demand driver going forward. The Robotaxi event, which was scheduled for August, has been pushed back. They give us a hard date of 10/10 or October 10th for that Robotaxi event. And Elon Musk teasing that they'll be showing off a, quote, couple of other things at the Robotaxi event that could be exciting. The Optimus robot, which is the humanoid robot they continue to show off, very impressive in my opinion. Version 1 will start limited production starting early next year. This will be for Tesla use inside of their gigafactories. Several thousand, they said, will be produced by late 2025. That is next year. In 2026, you'll have a version 2. And that'll be for public consumption. That's, again, take all these timelines with Tesla with a grain of salt. You can almost plus or minus 3 or 4 years on a lot of this. Now, the energy business, according to Elon Musk, should double, maybe even triple with output expansion that is currently going on right now. And that's good news when you come over to the energy business. That is the fastest growing and maybe at some point, maybe the most profitable business unit, at least in the shorter term for Tesla. Back to the Optimus robot and full self-driving. Both of those are seen as long-term valuation drivers for Tesla, and it could be higher than $5 trillion. Elon Musk referenced Cathie Wood's ARK Invest, which has done kind of an output in terms of valuation that they believe full self-driving and Optimus will bring to the company. After Elon's kind of prepared remarks, shares of Tesla were down about 5%. On the product side, on the Roadster side, they said most of the engineering is done on the Tesla Roadster and production should begin sometime in 2025. But I'll remind you, this is a Roadster here in the United States. This is what some people call a penis vehicle. This is not something that a lot of people are going to buy. Drive up and down your street, unless you live in like posh Miami or in parts of Los Angeles. Most people have trucks, SUVs, big cars. People here in the United States, this Roadster is going to be a very niche vehicle. Wouldn't expect it to move the needle from a financial perspective at Tesla. He was asked about the first Robotaxi ride, and they said that they'll be relying on full self-driving clearing regulatory hurdles, which we've talked a lot about here on the channel. Next year for those regulatory hurdles seems highly probable. They had no comment on expanding the Cybertruck a brand to like a van or an SUV or maybe even a smaller pickup truck, maybe without like a backseat. I think that's inevitable for Tesla, and this is probably one of the bullish side, at least on the automobile side, is they've got a great design for Cybertruck. You know, look, the Cybertruck is one of those vehicles you either love it or hate it, but that's perfect from a brand perspective. And what's interesting, as we'll talk about here in a moment, is they're referring to the Robotaxi, at least Elon Musk did, as the Cybertaxi, so you could see maybe some brand crossing over there. The 4680 battery cell program continues to progress. They talked about it at length, at least as it relates to the Cybertruck. On the Dojo supercomputer, Elon Musk said something that was incredibly bullish for NVIDIA. He said NVIDIA hardware is still in such high demand and it's still really expensive. NVIDIA can kind of charge whatever it wants for it, and it's hard to get enough GPUs. That's probably bullish for NVIDIA earnings, which are crossing, I think we've probably got another 30 days or so. On advertising, shareholders and fanboys of Tesla continue to push the company into maybe producing more advertising, and they kind of scoffed at it. They said that they need to keep costs low and not advertise as much. Now, interestingly enough, this was Jeff Bezos' early strategy with Amazon. He constantly scoffed at, hey, instead of buying a $5 million TV spot, I could use that to cut cost and save cost, and that is what consumers want. And so Tesla's kind of taking that route, saying that consumers want affordable electric cars, and if we advertise, that puts that under pressure. Giga Mexico is now paused. So you're not going to have Giga Mexico probably anytime soon. And they'll readdress this after the election. Trump says heavy tariffs are going to come from Mexico vehicles imported to the United States. I tell you what, that would be incredibly bullish probably for Tesla, as there's a lot of American car makers that get a lot of parts and certainly a lot of vehicles from Mexico. Even if the Democratic candidate, whoever that ends up being, becomes president, I wouldn't assume that Giga Mexico could be a thing, because the current administration, led by Joe Biden, has actually been pretty heavy on tariffs, not necessarily from Mexico, but that's something that could come. Now, Elon said the Cybertaxi will be manufactured in Texas along with the Optimus robot. A lot of big things going on in that Texas facility. A few major OEMs, which is other car makers, are interested in licensing full self-driving. We've heard this before. I'll have another comment as it relates to that here in a moment. Elon says the opportunities to integrate XAI, which is a separate company, into Tesla, but that it would need a shareholder vote. So left the door open to potentially combining or partially combining those two companies. Those were all the shareholder questions that you could contribute to as a shareholder. Now shares of Tesla were down about 7%, and this was on to quote the professional analysts. Now, Elon says long-term, the value of Optimus, which is the autonomous robot, will exceed everything that Tesla does combined. A little bit of hyperbole that you hear a lot from politicians, but we'll see. If I actually think Elon is probably accurate in that statement, because he says demand for the humanoid robot exceeds 20 billion units. He's assuming that almost everybody on Earth will want one. I think there's a lot of developed countries that could not afford a robot. However, you've got a lot of industrial demand. Even if Elon Musk is only 10% right, that instead of 20 billion units, the demand is 2 billion units, we're talking about a company that is worth way more than the current valuation at about $800 billion now. Elon also pointing out something that doesn't get pointed out enough is that Tesla has all the ingredients, the manufacturing chops and the facilities, the battery technology, and the AI capability to build Optimus, and it's one of the few companies in the world. And then when we come over here and look at Tesla's balance sheet and their actual financials, this is one of the few companies that can do it without having to raise really any money. Elon on distributive compute, this is where you would share the unused compute power that your Tesla might have sitting in a driveway. And it was a little choppy during the conference call, but I think he said that would require new chip technology, not launching until 2026. Elon admitting that even if you had an OEM, which is another car maker, adopt full self-driving from a licensing perspective from Tesla, the camera tech inside the car would need to match and communicate with Tesla systems. So it would likely be years before any revenue recognition would come in the door. And the company, whether it be Ford or GM or one of these other OEMs, they would have to sell millions of those cars for it to actually show up on Tesla's financials and make a difference on an $800 billion company. On tariffs, China into Europe is a challenge, as Europe is, kind of in the tariff game as well. Berlin is kind of picking up a little bit of the slack there. Full self-driving, clearing regulatory hurdles, which has been one of the final hurdles, actually, to get full self-driving into the hands and kind of launch the Robotaxi product, if you will. It requires demonstration that it's safe, or preferably safer than humans, and that Elon Musk didn't think regulatory approval will be a limiting factor, and that pretty soon, probably by the end of the year, they'll be asking for and receiving approval for full self-driving from the regulatory bodies, both in China and Europe, before the end of this year. So things are moving quickly there. GM, you probably saw this earlier this week, blamed regulatory factors for its Robotaxi failure. This is GM's attempt at building an autonomous vehicle. Elon Musk was pretty harsh here. He said it was actually because GM's tech doesn't work and it's really their fault, but they're blaming the regulatories. Robotaxis will operate using the Tesla app. There was almost explicitly asked, will you use a partner like Uber or Lyft or something like that? And they said, no, the fleet will be customer-owned cars. And this has kind of been the narrative around the Robotaxi product for a while, is people like me who own Teslas and they sit in the driveway for the vast majority of the day will be able to send our fleet out and presumably deliver people or goods or maybe both, and will share in the revenue. Tesla also admitting that they'll make and own some of the fleet that goes out into the Robotaxi product. Now, Elon Musk on Trump winning the election in November and potentially taking away IRA or Inflation Reduction Act, which is got to be one of the best names of a bill ever, since it did nothing for inflation, but that it would be devastating. So there's subsidies right now when you go out and buy an electric vehicle. It used to be on your taxes. You could put it on if you did turbo taxes or you had an accountant do your own taxes. You could take a tax credit when you filed your taxes. Now, a lot of people actually don't pay taxes. Now, maybe people that buy Teslas, most of them do. I don't really know. But now what they're doing is they're giving you that regulatory credit right up front, and Tesla gets to pocket, I think it's up to $7,500. They take it off the price of the car, but they are actually still receiving that from the federal government, aka the American taxpayers. Well, Trump's not too keen on this, and I think Elon Musk is very accurate here. He says this will actually be devastating for its competitors, because competitors aren't even making money on these cars, and they're not really selling that well. Take away the regulatory credits, and it's even worse. He says it'll be slightly bad for Tesla long term. Things will be fine for Tesla as long as you believe the autonomy hype and potentially some of the Optimus hype. That was the end of the conference call for Tesla. At the time, shares were down 7%. Now I'm seeing in the after hours, shares are down 8.5%. I think it's going to be a bloodbath for Tesla moving into tomorrow. The reason why is because you've got a stock that has performed great over the last month. So let's not gloss over the fact that shares of Tesla have really kind of front run these results, which I'll show you here, are not really that good. But over the last year and year to date, shares have not done well at all. And when you put up minus 7% growth in your core business, your automobile revenues is your core business, you were down 7%. Last year, you had $21.3 billion in revenue. Now you're under $19.9 billion. Now, good thing is, look at this energy storage business. And again, I told you there was a comment on the conference call that Elon Musk said they're going to double, maybe even potentially triple the output that is currently available in the energy and storage business. That is good news because you went from $1.5 billion all the way up over $3 billion. I'll show you the operating profits here in a moment. Their services revenue continues to tick up, but that's probably a relatively low margin business. Operating expenses ticking up 39%, EBITDA margin taking a hit, everything else taking a hit. Whew, it's not good for Tesla. That is because their most popular vehicles, the vehicles everybody is buying, is the 3 and the Y. Look at this, 386,000 vehicles produced in the quarter, 422,000 delivered in the quarter. However, that is a decline, 5% year over year, 16% decline on the production side. Yes, you have the Model X, the Model S, and then you have the Cybertruck. You had some growth there. I would assume a lot of that has to do with Cybertruck, but we're still talking about $100,000 pickup truck. You are going to see these in LA, in San Diego, where I was last weekend. You're going to see them in the parking lots of country clubs. But, you know, that is not the lifestyle of most people, and it's not going to push the needle over and above things over at Tesla, at least, again, in the shorter term. Total deliveries down 5% year over year, but storage deployed or on that energy business up 158%. Supercharger stations up 23% over the past year. I tell you what, if you're like me and you own a Tesla, those supercharger stations, this is the moat around the business, and this is the reasons why a lot of OEMs had to cave and use Tesla's supercharging network because it's really the only one really in the world. So huge asset there with Tesla that's probably undervalued by a lot of shareholders. Now, automobile sales, $18.5 billion. I think the key thing to show you, though, is this energy storage business. I don't think we have any catalysts coming forward. Yes, you have an interest rate drop, but Tesla is subsidizing the interest rate. You go to Tesla's website, you can get one of these bad boys for like 1.9% APR. You can lease one at a really low cost. The cost of the car, I don't think, is a huge hurdle for a lot of people. I don't see a lot of momentum, at least in the shorter term, for their vehicles. But look at this energy business. Talked about grew 100% revenue-wise, $3 billion. Here's your cost of those revenues. Your energy and storage business coming in at $2.3 billion. So you made $700 million on this $3 billion in revenue. Tell you what, you continue to grow that, not necessarily a 100% clip, but let's say we smooth it out over the next year or two, 35, 40, 50% clip. Well, yeah, you are going to generate significant profits there. Total gross profits at Tesla coming in at $4.6 billion, basically flat year over year, quarter over quarter, an improvement. So the company continues to do a nice job controlling a lot of their other costs as they're seeing some hit or at least some slowdown in their core business. You see research and development at $1 billion. That's basically flat year over year. Selling, general, administrative, it's down quarter over quarter. It's basically flat year over year. Total operating expenses coming in right about $3 billion. You had some restructuring charges. If you strip that out, you're at $2.3 billion. That's a dramatic drop over the previous quarter. It's in line with previous quarters. It's up slightly over a year ago. Net income coming in at $1.5 billion, a disappointment compared to last year's $2.7 billion. Now, one of the myths about Tesla is it's a struggling company. Elon Musk doesn't know what he's doing. He's making all this money from regulatory credits and the government. It's simply not true, guys. $30 billion in straight cash. This is just straight cash, not including inventory, not including their facilities and their production facilities. You want to include all that. You've got total assets of $112 billion. You want to discount that a little bit. You're still looking at about $100 billion in total assets. Total liabilities for Tesla is $45 billion. I told you they had $30 billion in cash. And if this company wanted to go out and raise $5, $10, $15 billion on the back of its stock or certainly some kind of financing, they could instantly do this. This is a company that's not in any financial trouble at all, barring some kind of massive recession. But in that case, you'd have every stock getting crushed, although Tesla would be particularly crushed because they've already got a premium valuation. From a cash flow perspective, $3.6 billion of operating cash flow compares really favorably to the previous quarter, but it's about the same. In fact, it's a little bit better than a year ago. They continue to invest $2.3 billion in the most recent quarter on capital expenditures, although that's a slowdown from the previous period and up maybe about 15% from last year. Things are fine from a financial perspective with Tesla. The bull case, though, is that Optimus robot, which I'm particularly bullish on, full self-driving. I think people are getting a little bit over their skis on that, particularly people that don't own the cars and people that don't understand from a regulatory perspective. I don't think that's a product that's going to be rolling out really, really soon. Now, speaking of Tesla, in the after hours, we put up a big fake red candle. Now, look, over the past couple of years, Tesla shares have been going sideways. Sure, if you bought them before 2019, 2020 even, you're up huge. But everybody that has bought shares of Tesla over the past 3 or 4 years is either up a little bit or basically stuck and down on this. Now, what we'll focus on, though, is kind of this shorter term trend that we've made really since April. Bottomed out here in April, down at about about $140 per share. We're making a series of higher highs and higher lows. I've got a black line on here. I don't know if you can see this. This is basically a 50-day moving average. We are about to close underneath that. That's a bad sign. It's probably going to roll over, especially if Tesla stays here. You're going to see a downward curve in the moving average. That's probably not good. I think Tesla could come back down here and retest the $200 area. That's the first area where you could step in and buy Tesla, because if you want to stretch this out, that $200 area is interesting from a demand perspective. It has been areas of support for Tesla in the past. That's the first area where I'd be excited about Tesla. I know it's about $25 away from the share price, at least in the after hours. I tell you what, we might hit that tomorrow or by the end of the week. Shareholders are rejecting Tesla's latest results. They are rejecting that full self-driving is going to create any type of large revenue opportunity from a Robotaxi perspective, certainly from an OEM licensing perspective. I think that is correct as well. You have the Optimus robot that is likely 2 years away at best from generating any revenue. So in the shorter term, this company is relying on rather mediocre automobile revenues, in fact, declining revenues there, and an energy and storage business, which is soaring, but it's coming off a rather low base of just $3 billion and about $700 million in operating profit. And when you're talking about an $800 billion company, just simply isn't good enough. That was Tesla's Q2 results. Hopefully, you guys enjoyed today's video. We'll be back again with more. Good luck with your investments.